Wow, ExxonMobil went green.
Okay, we're live, Bob.
Okay, thanks. I'm gonna hide my window for a minute.
All right, guys, we are live and we are waiting the FOMC announcement. We're expecting a quarter point rate cut. We'll see what we get here. We got the live chart of the S&P 500 futures on. Bitcoin's pushed up to new all-time highs here in the minutes leading up to the announcement. So we'll see what the announcement is. Again, quarter point expected. And then we'll have the presser at 2:30 p.m. So we should get the official word here in about 10 seconds or so. We'll see what the market reaction is. Got a 5-minute chart here. This is the initial balance or first hour range below. Pretty wild reactions here. Hitting 6,000. They basically just cleared stops on either side. See what Bitcoin's doing. Bitcoin poked the all-time high of 76,824. This is the current monthly profile, and this is the cumulative breakout area. Basically like the 8-month profile that we've been building out on Bitcoin. So we're leaving a station basically on that, breaking out of that range.
SPY's pretty flat, and SVIX is doing great.
All right, we got the quarter point cut as expected. Fed says risks to goals remain roughly in balance. It was a unanimous decision. And then we'll talk a little bit about that, because you have to ask, why are they cutting rates when the economy seems to be humming along, markets at all-time highs? But we'll go over some macro things here to talk about probably why they're concerned with all that.
Yeah, oil's up, gold's up, ES is up, volatility's down, Bitcoin's up, uranium's up.
Yeah, Bitcoin is probably heading to this. This is the CME chart on Bitcoin, so I'm thinking we're going to head up here to 78,220.
TLT's still green.
On the back adjusted chart on the BTC futures, the previous high is 79,055. So that would create a new all-time high if we broke over that on the back adjusted CME chart. Adjusted for inflation, BTC previous all-time high is actually a little bit higher at 79,350.
What a tight reaction.
Yeah, I think, what that says, Bob, is it's priced in.
Priced in, and they're already looking beyond him, and they're thinking Trump. What are the policies, I think. Yeah, my portfolio moved $100 and it's fairly broad-based portfolio. So the market is definitely looking past this meeting, Phil, for sure.
Bigger picture, this is the daily chart on the ES. And essentially what we have here is a move above the 1.5 standard deviation over the 20 period moving average on the daily simple moving average. So basically a 1.5 Bollinger. And when you get these moves over the Bollinger, at some point you're gonna come back in, and highly likely at some point we're gonna pull back and meet up with, like, say, the daily 9 EMA, which is pretty standard, or the 5 EMA on a lower time frame chart. I can show you where that is. 5 EMA is up here around 58.99. So most likely we'll back test that first. But if you look at the SPX, if I switch, this is the futures. If I look at the SPX itself, the actual index, and you can see we've multiple gaps up. Whenever you gap up over the that 1.5 standard deviation, you're going to exhaust most likely. Here you can see where we did actually pull back, gap up, exhaust, pull back, hit the daily 5 EMA, bounce. Probably going to see something very similar to that play out.
Yeah.
So it just tells you we're pretty extended up here. Net liquidity has been trending higher.
We're getting a little bit of a pull down now, not much. We're still within that first doji.
In a little closer to overbought conditions here on this reading on the net liquidity chart. The one thing that also puts into perspective how stretched this move is if you look at the VWAP, these are the VWAP bands. There's 1, 2, and 3 standard deviations. We're at the 3rd standard deviation now. We're hitting that here on the highs into 6,000. Historically, if you look back on the chart, as you get into the quarter and those bands expand, it's very difficult to maintain a move on that band and be able to trend over it. So getting to that here gets a little stretched. Now, like this situation here back in May 2023, even then you can see where the initial move up to it was rejected. Then you went back to the moving VWAP, went up to it again, rejected. And then you had a breakout move over it. But even then it stalled the move, chopped sideways. The lower band held as support, and then it ran back up to it again. So it can move up and it can expand against it, but initially you're going to likely see a rejection or a mean reversion move off of that. So it would be pretty much an outlier if you just had a nonstop move straight up here, given how far this has already moved and hitting that for the first time. These market algorithms typically have a mean reversion tendency, so there's more reasons why we could see some exhaustion here. Yield curve still positive. We're still looking for that to kind of follow this projected path. And once we get to 0.6, we're looking for that basically to hit our recession threshold. So that's currently, as long as we're dancing around below that, though, this market has room to run. So plenty of room to run yet in terms of the yield curve. This is our Ranger buy zone, basically. So big support, and where we'd be looking for a pullback is at least into this 1 hour Ranger buy zone. And if it gets deeper than that, we'd look at the 2 hour Ranger buy zone or pullback. Heat's embedded down here, so basically indicating a very strong trend. But once that starts to roll off, and I would look for that on the hourly, which actually already has happened. So we're getting, the equivalent of a bearish divergence here, making a new high while the heat indicator is not confirming. So I do expect at least a pullback to that hourly. But I don't know if we're going to see it today. A lot of times what will happen is you're going to get, if the reaction isn't, if they don't dump right away and they don't dump on the presser and we close on the highs of the day, look for the sell to come overnight. 80% of the time, you will see it's actually the thing to do here would be to buy if this does hold up here, or say it does climb up to new all-time highs into the end of the day. The high percentage play is to buy out of the money puts for tomorrow, so you're not risking a lot, but one DTE puts at the end of the day if that plays out. But whatever the candle direction is, if they dump it into the close, then you buy calls. If they hold it up into the close here, close green, then you buy puts. That's 80-85% of the time that plays out. And so if you buy out of the money, the risk reward on that over time is very profitable. So it's something to think about as today progresses. We got 20 more minutes until the presser, and that's really where we're going to find out where this market's going to go.
Yeah, and you need to just go one contract out so you get advantage of the gamma. And if you do get a trade come your way and the open, sync up your stop pretty tight on those puts, because you're gonna have time decay. It's gonna start hitting you pretty hard, and so take profit, and then if you get in a shot, then you can just go back in long puts again.
U.S. interest rates futures pricing another quarter point cut in December.
Yeah. My prediction's still on, Phil. By the time we come out of the recession, we'll be back to the zero bound on interest rates. So,
yeah, I think what's been the theme that we've been trying to, we've been saying is coming is that everything round trips, right? Everything round trips to pre-COVID levels. We've already seen that in stocks. Actually, a number of stocks have actually already done that, which is scary because they're going to go a lot lower.
Yeah, what people don't understand about what Trump wants to do, there is short-term pain involved, especially with companies. If he does get those tariffs pushed through, it's going to cut into their margins. Remember, companies are trading at record margins, and Trump's a populist. He's going to play Main Street off of Wall Street in a different way than the Democrats do. And so, the stock market will take a hit, initially, and you're just going to have to pick the right industries, because people that import a lot are going to get hit pretty hard, because they're not going to want to lose market share. So they're going to take a margin hit on the tariff. They're going to take a margin hit on keeping prices where people actually will want to buy the product. It's going to be really interesting. I saw a study they did prior to them putting the income tax in with the Federal Reserve, is that they had tariffs at 40 to 50%, and if you bring spending back down to the 2020 level, just 4 years level ago, and then you apply the tariffs, you don't need an income tax. It was a really interesting study, and I think he's going to push pretty hard on that, and that's going to be our civil war. I think there's a lot of people that have been sitting and just collecting free tolls for 100 years that are going to get a wake-up call.
Yeah, so we're just kind of chopping around the Fed announcement here. So this is going to be all about the presser, which starts in about 17 minutes or so.
Yeah. I know it's hard to talk about stuff when the stock market's just not moving on the announcement.
Well, we can talk about stuff. Let's go look at some macro here. We talked about the yield curve. This is the put call ratio. We're at elevated levels here. You guys notice. The ratios here are at levels at which I would look for a pullback short term. But you'll notice that as you get into these elevated levels, you do get, if not a small pullback, a large pullback. So here, just all along the way here in these levels. Now, in bear markets, you don't need it as a high a put call ratio reading because it doesn't, typically you'll make a lower high at a lower threshold on this. But in a bull market, yeah, when we get to these levels up here, typically we'll see a short-term pullback at the very least. So that's another reason why we can see some exhaustion in here. So you got that, you have the VWAP, third standard deviation over the quarterly VWAP. See, so those are reasons to look for it. Now, in terms of other data points, if you look at like the unemployment rate, if you check out like every recession that we've had, that which is these, the shading back here, you'll notice that basically when we get a rounded bottom on unemployment rate, which I've highlighted here, it always sniffs out trouble. And that's what we're getting now. And if you slap on a simple RSI, whenever we get this cross on that over 50, then recessionary all along the way here. So basically, that's what we're looking for.
Yeah, Phil, and looking at NVIDIA, the 4-hour chart on NVIDIA, even though it's not flashing our standard reversal area, we are getting a black top on the line of our super histogram. And last time we did that, we went into a 2-week 15% dump on NVIDIA. So we're at that point again where it looks like we have an exhaustion move coming on NVIDIA too. And NVIDIA really controls the NASDAQ at this point.
You guys look at the non-farm payroll data. This is really starting to come down into recession level. We're at 12. That last jobs number was a big miss at 12,000. When you start seeing negative numbers printing, especially when you're coming down from on high, that's usually going to be a recession. So you can see that happened here in 08, happened here in 01, when we had a recession in 90. Same thing, come down, start crossing over that negative threshold. So getting very, very, very close to a recession print on non-farm payroll numbers. Talk about the unemployment rate. Initial claims, so yield curve says we still have room to run. Initial claims still tells us we have room to run. You look at the initial or the action on the initial claims, we really have to see a print of 354,000 on that. So, and I suspect we will, but whether or not we see that sometime before the end of the year or Q1, that's really up for debate. But that's, you have to be open to the markets continuing to grind until we see something like this. At this point, though, if you get that recession level print on initial claims, you have to assume the market's done. Top is in. So those are some macro things that kind of are, pointing in that direction. This is the CME chart of Bitcoin. You kind of have to keep an eye on the CME chart because this is the institutional chart, right? And so, but it gave us a really nice, clean, we had this down channel that we've been chopping in all these months. And it gave us a really clean back test of that the other day and just a rocket ship move out of here. So looking for this trend line, a pop into this trend line, 78,035. And then it would also could challenge this previous back adjusted all-time high of 78,910. That's on the futures. That's a back adjusted all-time high. So those are a couple overhead targets that we can use as we're making new all-time highs. Another thing while we wait is looking at the gold SPX ratio, which is extremely elevated, and it's been elevated for a while now. And typically when you get up into those levels, you are looking at, kind of a headwind for the price of SPX. Now, there's a couple different modes. You can have this reading on a dump. You can have this reading on a pump. When you have this reading on a pump, we look for it to start rolling off with price. And when it does roll off with price, then we look for a cross below 0.5 on that correlation. So if we do pull back and we see this rolling off sharply, we'll watch for that cross because that likely will coincide with basically a short-term low and then another bounce. And I think we just have to get out of this way, get this out of the way, I should say, and then we'll be probably clear skies going into that move up into December. Then you have the quote unquote Santa rally, and that's typically last part of December into the middle of January. And it could be a very, very bullish move though here, guys. So don't be quick to fade the strength. In terms of looking at market breadth, I mean, we're just nowhere near levels I would look for, at least in the short term stuff, levels where I would look for a top here. Medium term stuff's getting a little elevated, but I'd still say this overall that we have room to run. And again, I have a fib target up around 6,100. It kind of coincides with this upper trend line here. So any pullbacks at this point is just basically looking at dips to buy until we get up into this area.
Phil, did we have a number at 64 or 6,500?
Yeah, we got another one up at 6,400. So to me, it's like 61 plus and 64 plus. And the rate that we're moving up, both of those are definitely in play. We have gamma.
Kind of scary. 6 months ago, we laid those things out. We're like, are we really going to get there? And here we are.
Yeah, and then it just bolted. And same thing I think with Bitcoin. It's just going to move very, very, very quickly. And because we've had targets north of 100K, and I think it's going to get there faster than people realize.
Yeah, I have a Bitcoin weekly chart that I put a trend line on it, and this thing has been it's saying 95 to 97,000 here by January. It's just been on that glide path. It's kind of scary.
And there's an interesting thing too. If you measure the bear markets, so that the high to lows in all the bear markets that Bitcoin has, and then you take that range, whatever it is, and you throw a 1.618 extension on that, that usually gets hit on the ensuing cycle pump. Now, I think this cycle is going to get truncated by a recession if we get it. So, I think the window of time to pump into that is short-lived. But that would imply, if this was to play out, that would imply that we would hit about $170,000+. I just don't know if the cycle is going to play out for that. But this is a gamma exposure chart. Gamma X, GEX is really elevated up here. When we get up into these readings, it kind of coincides with local tops. So you got put call ratio, you got gamma X, they're all pointing. You got your VWAP, you're at the third standard deviation over the quarterly VWAP. These are all fairly extreme readings, so would not be surprised that a move up into a news event such as the FOMC day ends up becoming a sell the news event.
Yeah, and I got my ABC move, Phil, started September 23, and the A move peaked in March of 24, and then the C move started in August of 24, and if it plays out, it'll peak out in February of 25, and we're looking at a 50 to 60,000 point move from $50,000. So that's just an ABC move. Pretty incredible.
Yeah. While we wait for the presser to start, just some Bitcoin chart here. So, typically these windows between the election and inauguration, very, very bullish windows. Going back to the 2016 timeframe, the week of the election, we had a close of $702. By the time you went into the inauguration week, you were up at $933. So pretty good, and back then those were pretty decent moves in the price of Bitcoin. Moving forward into our more modern era of Bitcoin price action, 2020, you had an election week close of 15,042. By the time we got into the inauguration, we actually had a market high peak up there at 41,000. 986 that happened the first week in January, and then the inauguration closed at 32,288. So that's why we're expecting again another run up into the inauguration. And then if we look at where we are today on that, and we got this long-term logarithmic growth curve on here as well. So at the very least, the next place we're going to head to while we wait for this move up into the inauguration is going to be this midpoint on this growth curve, which should take us to, currently it's trading at 101, almost 102,000.
Yep.
So that's the next spot. And historically, these cycles always push over that level by a good margin. So I don't know if we're going to get the full move. If we got to, if we're rolling over into a recession, we probably run out of time to complete the move, which would take us up to 207,000. But maybe it's going to be more like a 2019 where you get a partial move over it and then fail. So that's just something to keep an eye on. But, essentially you have this giant breakout that's happening, right? You've had a multi-month coil, and then Bitcoin's breaking out. Whenever you have these large structures, especially on something like Bitcoin, and you start breaking out of that structure, this isn't going to be a short-lived move, okay? This is going to be a multi-week breakout move, and it's going to look something similar to how we created the basically the flagpole of this big flag, similar to this, multiple weeks of green. I think it's going to be similar to this run up here we had in 2020, late 2020. And similar to what we saw toward the end of 2017 as well. So can move. This is the mode. The mode doesn't activate very often. The mode doesn't last very long, but it makes incredible price moves. So I think somewhere between 100 and 173. I know that's a big range, but I think realistically somewhere in there is where we see this thing squeeze off to, and then that's it. And then we go into a recession, and I think that high holds for quite a long time. We have about 5 more minutes, and then the FOMC presser begins, and we'll start rattling off some headlines on that.
Hey guys, I think Coinbase might be fully valued for the moment. MicroStrategy probably has another $100 in it, but Coinbase played massive catch up yesterday. Unbelievable move. Yeah, JJ, you asked if Bitcoin hits 170, the dollar would have died by then. Don't be so sure about that. The dollar is the one-eyed king in the land of the blind. There'll be a lot of other currencies that will get crushed, and the dollar and Bitcoin can move together, just like gold and the dollar move together quite a bit. So, at the end of the day, you have gold, Bitcoin, and the dollar are the three amigos, and then it'll just be two. But you're looking probably destruction of the euro and the yen and the yuan and the gilt before you'll ever see anything happen to the dollar. Swiss franc's going to be fine, but it's just so small that it can never be a reserve currency. See, Phil, you and I are looking at the same. We're looking at the same thing. ABC move there.
ABC.
Yeah, the dollar's going to remain. Nothing's going to take away the dollar. They're not going to have Bitcoin as a reserve currency. Let's just be really clear.
Yeah, I know people. I've heard that that's just that's a stretch for me too.
Just from a practical matter.
Yeah.
Governments will go around house to house and basically shoot and kill you. Okay, so you don't want that kind of civil war. Okay.
I think what we're seeing here on at least the SPX, right, the index, not the futures. We take this measured move. This is why I have 6,100 here as a fib target. We had one here at, I think it's a little darker. So we had a 236 at 58.38. We tagged it, chopped on it. That kind of killed that area, killed the move. We pulled back this most recent pullback to the 50-day moving average, and now we busted through it. So on this current push, we could have pullbacks, etc. But basically, we're looking for this leg to continue up into that 6112 on SPX to complete that fib move, and that's a pretty clean bounce off the 786. So it's a pretty deep retrace, but seems to be respecting those levels. Look for that to continue to expand higher on that. Yeah, dollar's not going anywhere.
No, and I don't know about exporting inflation because we're still going to probably be a net importer of trade goods.
If Bitcoin gets that blow off move, don't be surprised though if you see dollar pull back. I know there was a pop off the election, which is normal, but it bounced off 100, which is a big level. So I think a lot of that move too is just bouncing off that support level. But if we come back down to it, Bitcoin continues to squeeze because a lot of times Bitcoin is just inverse to the dollar. Although there are moments in time where they trade together, but I think if you see that dollar roll off from here and break, you could see it break 100, and that would be the finale of this rally because dollar going down would rally the asset prices on everything. And maybe you see just a dip down to like 97, 96, finishes off the move to the upside, and then dollar rips. And I'm talking rips. Probably goes back to like 120 or higher if we get the recession plays out the way we think it will.
Yeah, my view on TLT was this move down was a sell in anticipation of the election, and now that the Fed's back on cutting rates again, it's going to put pressure on the 10-year to fall with the whole curve. Remember, the reason why you're holding TLT is when people start massively moving out of the stock market, they're going to move into the bond market. There's nowhere else for them to go. And, if you're worried about that, energy and TLT kind of work in negative correlation, which means that you can hedge one with the other. You guys know if you own TLT, it trades 3 times a week on the options market. You can literally create a 12% yield on TLT while you're waiting for it to start doing its big push higher. So right now I have 95.50s on for tomorrow. I think they're pretty safe. And then tomorrow I'll put some on for next week. And you just adjust to pick up 20, 25 cents a contract every week at this price range. And unless you start seeing it go into a positive price structure, and you're just picking up, pennies from heaven. Well, I don't think anybody's expecting to see. Is the dollar anywhere near 120 right now? I don't know.
No, it's like 104, 105.
I think you're looking for a problem that's not there. There's a basket of worries. Take that one out of your worry basket and focus on other things.
No, a dollar at 120 would not have Bitcoin over 150. It's the opposite. Dollar would be, if dollar let's just say Bitcoin does do a blow off move towards 170. All right, just parabolic blow off move. I think the dollar's breaking 100, hitting, and that's a brief break, like a deviation. We'll spend some time under 100 and then quickly reclaim it.
Look, there's 2 ways the dollar can go higher. The dollar can go higher because we're borrowing less money, or the dollar can go higher because we're defaulting on too many loans around the world. Okay? That's why I always kind of laugh when people say, oh, we're going into recession, the dollar's going to collapse. If we go into a worldwide recession, the dollar's going to skyrocket. Number one is because people are going to be defaulting on dollar debt all over the world, including the US, and we're still a safe haven. So people don't understand currency. You know, currency is what's produced that you put in your wallet or in your bank account, and then currency is produced by the banks when they lend you money. And so when a loan gets paid off or defaulted on, those dollars go away. They're no longer part of the pool of available currency. Okay, so that's what people tend to forget when they think about, you know, and everybody thinks we're Germany and we're going to go into a Weimar kind of move, which is just simply impossible. You know, we don't have anybody imposing, you know, currency controls on us like the French and the English did to the Germans in the 1920s. Not unless France and England want to be bombed into the Stone Age.
All right, let's go back to the ES here. Look at the Foots.
Is he yakking yet?
Yeah, the presser I think has started, so we're getting a little more positive reaction here. Let me put the reaction on here. Reaction level. So right now, what's going to happen is people are going to be looking for, you know, why is the Fed or is the Fed going to be hawkish or dovish and blah blah blah. So that's kind of like really all we're looking for out of the presser here is kind of what the sentiment's going to be. All right, so here are a few of the headlines off of his initial comments as the presser begins. He says the economy is strong, labor market remains solid, inflation has eased substantially. The Fed took another step in reducing policy restraint. Growth in consumer spending has remained resilient. Improving supply conditions have supported the economy. Hiring would be higher if not for the storms and the strikes. Wage growth has eased. Labor market conditions are less tight than pre-pandemic. Labor market is not a source of inflation pressure. I don't know about that, Bob. What do you think? Labor market's not a source of inflation pressure?
No, he's wrong.
I think when fast food workers are making $20 an hour in California, I think that's a problem.
Yeah, and the 30% burden you put on them for healthcare.
Right. Trump, it's reported that Trump will likely let Powell serve out his term until May 2026.
Yeah, for sure.
Core inflation remains elevated.
Didn't Trump appoint Jerome Powell in the first place?
I think he did, right? Because prior to that, it was Yellen. And
Yeah.
so Yellen was through the Obama administration. Yeah, so he appointed Powell.
Interesting.
He appointed Powell, threatened to fire Powell, and
Yeah.
now he's going to keep him on.
Now he loves Powell.
But they're going to, I think Powell's probably, if I was Powell, I'd be looking for exit stage left, dealing with the mayhem that's coming down the pipe.
Oh.
If the Powell says if the economy remains strong, inflation not moving to 2%, then we can dial back policy more slowly.
If he could drive energy down below $50 a barrel, Phil, there'll be no inflation to speak of.
Yeah, I think, basically, one thing they got to watch, though, is the bond market, right? Because you could argue that they may be losing control of it there because it's, they're cutting rates. It's not working. Rates are actually going up because the long end of the bonds. People are, they're just not happy with basically demanding higher returns for that stuff, and that goes back to bond market looking at the deficits. But if you get into a recession, regardless of all that, they're gonna find a buyer for bonds because that's just the go-to trade until the yields on those bonds start to drop because that people pile into that, the yields come back down. Fed's going to continue to cut, like Bob was saying, getting back to zero bound. So then it's not a long-term solution. And then I think too, what's going to help Q4 and especially things like Bitcoin, and to a lesser extent gold, is China's probably going to unleash the bazooka, especially when they're looking at tariffs coming down the line. I don't think Trump's going to budge on tariffs, so it's going to make China print and probably print a lot more than they were anticipating.
Agreed.
So all of that, whenever China prints, always a very bullish reaction in Bitcoin. It's got a pretty sensitive reaction to China's liquidity flows. That's another reason why, on top of the structural breakout, and that could be what's triggering the structural breakout, is smart money knows that's coming. That should help propel it. All right, so Powell says it's possible that any administration or Congress policies could have an effect that matters. Those effects would be taken into account, among others. Hard to forecast beyond the near term. In the near term, the election has no effect on policy. Right now, what they're doing here, algos they're just running stops back and forth at the moment. Powell says, so basically, so far, the message here is economy strong, labor market remains solid, and inflation has eased substantially. Core PCE still, though, needs to get in the box, and it's not there yet. Getting a bit of a dump here. See what Bitcoin's doing.
A little bit.
Off the all-time from
Still not very favorable.
That was the initial all-time high. We've poked above it. So unless he says something, I think we're gonna have one of those days where we kind of end on the highs. We'll see, though. He usually talks for about an hour.
ExxonMobil's drifting up. Wolf's holding. Ooh, there we go. We kind of broke the average. We're at the initial range low, Phil.
Okay, so we just busted through the IB high. As Bob said, we've cracked the reaction range low. So let's see if they just wanted to run the stops. I noticed they've been doing that. They've been grabbing the initial range low. They've been grabbing stops that would be under there and then pulling back in. If this starts to run to the downside, then we would target basically getting back to the open of today at the 9:30 New York Open down there at 59.77. I think what the bond market wants to hear, if you want to initiate some bond buying, is some commentary on their current QT program, whether they suspend it, something like that. And I thought maybe that might be a possibility. Try to give a bid to the bond market, help it out. I think the yield curve is going to continue to steepen because basically they're cutting and it's affecting the short term, and which is what Yellen's just doling out, right? She's doling out a bunch of the short end, and that's bringing those rates down. But the long end, you're getting that steepener effect. So Powell says inflation data wasn't terrible, but higher than expected. Powell says we don't guess, we don't speculate, and we don't assume.
Hey, Phil, my daughter moved into a new apartment complex, newer, bigger, for the same price that she was in for another place, and they gave them a free month rent. So we're starting to see some
Huh.
softening in rents in California too.
That's something you haven't seen in a while. Softening rent market in Southern California.
Yep, we definitely have vacancies showing up now.
Yeah, and that's that's to me SoCal is like the that's like the last one to fall in terms of markets. It's such a resilient market.
And when we fall, it's brutal.
Yeah, then it's over. It's over everywhere. But it is the last domino, it seems. Florida's completely toast. I
Ugh,
mean, just brutal.
amazing. And Texas is having a supply glut now starting to show up too for housing, probably rents too. I got it. I'll be back 1 second.
All right.
The market here is just chopping
If
away.
we look at while you're doing that, and we're waiting for more info to come out here to affect price. If you guys look, this is basically Fed funds rate in blue, which obviously is coming down. You have unemployment rate in yellow, and when the unemployment rate started to move up past the core PCE, that's when there was a pause in hikes. We actually had like this was written prior to this crossing, but once that crossed, then you got the pause in the Fed funds going higher because it's just abnormal. You normally your unemployment rate is always well above your core PCE rate because you don't want inflation out of control. Well, inflation was out of control. And this isn't cumulative inflation. This is, inflation rate. So the rate of expansion. I mean, cumulatively, we're talking like even from 2021, we're up 15%. That's why Bitcoin actually truly hasn't made a new all-time high in terms of inflation. But we won't see when people think, oh, the Fed's going to go and, if the market starts to roll over, there's trouble, they're just going to go and do QE. Well, that I can tell you guys that's not happening until we get back in this box. Okay. The QE can begin in this zone. We got a ways to go yet. We're still at 2.7%. Remember, they don't want it. They want it at 2 or lower. Okay. This is just not, they're just not going to be quick to run to do QE. What they'll do, the market rolls over, they'll give us the rate cuts, the rate cuts, the rate cuts. We have, when you have rates at this high, that's a lot of quarter point and half point cuts that they can dole out every meeting, right? So we can have, a year or two easily of multiple rate cuts over and over again. So they'll do that. But until this falls, and if we do get a recession, this will fall. Then we'll get into an environment that we can do QE. So that's probably, if we do go into a recession, your bear market really isn't going to be over until we see this well into this box. So it's something to keep in mind. Core PCE needs to go home, needs to get back into the 1% to 2% range. And honestly, they hate you never really do see it, but if you got actually negative prints on that, that would actually be kind of helpful because let's face it, if you look from pre-COVID, a lot of things are up, 20+% in terms of costs, right? Aggregate inflation. So just to get this back to like 1%, you're stuck with all that elevated costs. So I definitely think there could be easily we could. And it would be helpful to see some of that come back in. So whether or not we get a bout of deflation, which they get very scared of because they don't like their deflationary spirals, that's something to remains to be seen. But it'll be an interesting. We do start rolling over. We do get a recession. It'll be an interesting 12 months in terms of what the core PCE does, and whether that goes negative, which would be really wild if that thing went negative.
I think we're going to get negative core PCE, Phil.
I would love it. I mean, I think we need it. I think there needs to be a big reset. It's just it's highly unusual. Let's just say that way. Put it that way.
It would be a hard thing to manage, but really, it's about oil. We have oil at 70. If they get oil down to 50, you're looking at 20%. Reduction in the most important commodity that we use, and I just I I appreciate Trump's sentiment, but I mean he'd have to drive oil down to $35 a barrel. I don't know who could produce oil at $35 a barrel at a profit.
That's just the thing. And a lot of the oil debt is collateralized around $40 a barrel, isn't it?
Yep.
So they have CDOs, collateralized debt obligations at 40, and that's where the oil business gets upside down.
Yeah. Then you get the negative $58 move when that
Yeah.
stuff happens.
Yeah.
But I think people would forgive Trump if he even got energy prices down 10 or 20%. I think people would be thankful. But I think we're gonna see a whiff of deflation in 2025 for sure.
If the oil market did that and everybody got upside down on their debt obligations, Bob, I think what they would do is they would just do what they always do, and they'll give them some sort of line to bridge that until it rights itself.
Yeah. So it'd be interesting for me because I'm heavy energy, but it looks like the energy companies like what they heard from Trump. So I'm assuming that they're going to make it up on volume.
Yeah.
So,
All right, guys. So again, and this is something I've been noticing in the last few meetings. They swept the initial announcement range low. Now, what's going to happen, I think, going forward, if we start rolling over because we're in a bull market, right? If we go into a bear market and you start to see the range lows broken, there's going to be continuation to the downside. So I think as we go into not December's meeting, but maybe starting in the February meeting or the March-June meeting, watch for that. Because right now all they did, and this is something, if you not understanding like range plays or how ranges work, a lot of times your biggest money is made when you rotate both sides of the range, right? So yeah, your initial range reaction, they go to the top of the range, they go to the bottom of the range, they actually break the bottom of the range. But this is actually now your true move typically, is everyone's trapped at the bottom. Everyone gets blown out now at the top. See that? A lot of that stops being hit, and now you're getting FOMO and they're chasing it. If you take 100% of the initial balance range, which is this bluish area, and all that is the first hour of the day, that's 6,005.
sorry, I'm laughing. The comments are funny today. Should we start tracking coffee futures hotcakes? Yeah, nothing's really moving on my portfolio at all, Phil. So it's moving up actually. ExxonMobil is getting a bid here.
I would imagine.
What's that?
I would imagine.
Yeah. TLT's still up a buck, guys. I don't think TLT's plummeting. What happened on election day was just a reaction low. Remember when it reacted down to $88 before, Phil? And then we said if it gets a reaction 84, it's going to 100. Exactly.
Yeah.
TLT's going to do the same thing here again.
Yep.
I get this question a lot on TLT. If you own it as a trade, just use the buy signal and get in and get out. If you own it as a hedge, it's a hedge. It's there for a reason.
Wolf is at 826 now.
I got to watch it because I have a target of 856 on Wolf if I have to move it for folk.
Yeah, we have there's actually some volume nodes, and when you look at the volume profile on Wolf, you kind of have to, because it's so skewed, because so much volume has come in between below $4 and $5, that it skews the historical volume profile. So you have to kind of just look at it in sections. And basically there's high volume nodes at 840, 875, and 920. 920 to 940 is probably gonna, if it did get up there, probably sees some sort of rejection because there is a decent volume node up there. But in the short term, there's a volume node at 840. And I think Wolf will pull back typically when Wolf gets like this and breaks out, I gotta let's redraw these. So we're hitting we've hit the 236 extension from this pull. We came back pretty clean bounce off the 382, and we're hitting the 236 there at 811. And then we have a 618 up there at $9.46. I think this ultimately is a real good target for this move. The banks, I think it was, what was it, Cantor Fitzgerald? One of those guys, their institutional target was $10. If we go from another pool, larger pool, we have a 618 up there at $10.19. So I think that's where Wolf's going. But Wolf does like it. It has a lot of volatility. If you look at this move up from 2 to 6, right? Look at all the ups and downs we had in that. And you had several dips to the daily 9 EMA that held, and then you had one bigger dip to the daily 20. I don't think you should expect to see anything different. I think you're gonna see the same kind of pullbacks. So that would favor a pullback at some point to the daily 9 EMA, and you look to pick that up on a pullback on a bounce, I should say. If you can get a daily 20, you could trail a buy on the daily 20. That's another way to do it. But this is a very strong move, and like I said, it seems like it's going to be one of those days, Bob, where FOMC closes on high. So
yeah, I may buy some NVIDIA puts at the close. Don't follow me, guys. It's high risk, but
yeah. But what I want you to, well, you don't have to, but maybe if someone were to do a lotto put for a gap down tomorrow, let's say,
yeah,
maybe you could find something cheap.
Yeah, give me a second. I'll show. I'll look here. So SPY Lotto.
SPY Lotto for tomorrow for a gap down.
Yeah.
Right, because it's 85% of the time.
I would do the 592, Phil.
There's 592 tomorrow's expiration.
Yeah, there's a gap at 591.82. You could actually go to the bottom of the other gap. You could actually do 593s. I bet they're pretty cheap right now. Let me look. Give me a second, guys. Now, it depends where we finish. I mean, if we scored up another 2 points, I'm not going to do that. That's too far of the money.
Yeah, let's see where we're at in an hour.
Let's just see what they're going to do to us. As everybody knows, I'm not a big fan of out-of-the-money trades, but I'll take a look at...
only for this setup.
Yeah. I'll take a look at this.
I'm with you. I think they're a waste of money most of the time, but
I do too.
On an 85% setup, I'm willing to.
What are we at? 595. So 595 is trading at $1.50. 593s are trading at 90 cents at the moment. That's a good trade. Even overnight, Phil, it's not going to lose much theta, actually. What I've noticed with these options, they just hold to the end anymore. They've been really stingy about letting you take profit.
So, how much is that put?
It would be if you did 10 contracts, it would be a $900 trade.
90 cents then.
90 cents. So we'll see where it goes.
Yeah.
Remember, we're going to get a nice theta burn here into the close too. So we may be able to get these cheaper if it doesn't do anything. The options are actually moving up. Is price moving down on SPY?
Barely. It's just been chopping. It's hitting its head against 6,000.
I think people are front running us, Phil. That's pulling back.
Well, they might. IV might come off when Powell's done talking too.
Yeah, it already gave up 5 cents. That's why you have to wait till the very last minute to jump this trade.
Right.
And it's a weird day because normally Powell announces on Wednesday, and you usually get the red Thursday, but we're gonna be dumping right into OPEX too.
All right, let's throw the histogram on here.
Yeah.
The TG super histogram.
I'm still a fan of the 93s yet. I'll let you know if I change my mind.
Okay.
Just for
So
record, guys, I won't be taking this trade, but I'll throw it out. I'm more interested in Nvidia imploding here over the next couple weeks.
so the super histogram is primarily showing you trend when the trend is getting overheated, and then potentially where the trend could roll over. Now, obviously, with all the chop and everything, this whole area hasn't really shown a trend. Now we are pushing higher, obviously, and we have a specific setup here in that we're breaking out over this range. So we could dial down to a smaller time frame.
Yeah, look at it pushing into 12 o'clock fill. It's at 596.
So we're pushing up higher. The histogram is green on the 1 minute. This is a very noisy time frame, right? Normally, but we're also pegged. There's two things here. There's the histogram, which is telling you, okay, now now it's getting a little overheated here. But it also, when you get yellow, it's telling you that the trend is at max. Okay, so you're going to see exhaustion from max conditions, but at the same time, max trending conditions can persist, right? So would you fade this move here just because you're getting the max readings? No, you'd want to wait for some confirmation.
By the way, SFIX is not confirming this move higher in SPY.
Also looking in Q.
Nice trade though off the bottom here at 240. 20-point move, Phil. We see a lot of 20-point moves on the Fed meeting days.
Oh yeah.
All I know is ExxonMobil is grinding up higher here.
All right, so we're maxed out on the 1 minute here on the reading.
Yep. Same.
Preferably, what I like to see is that you get really high readings, things get really embedded, and then this line here, which is kind of our trend change line, falls back down to a -4, indicating a pullback, and then it snaps back up into the direction of the trend.
Yeah.
Now, obviously, a very volatile, very trappy day with FOMC, and then Powell could say one thing and it could reverse hard, but we'll see how the readings are here. Now we're starting to establish a push up, a trend up. So algos and things like that are going to be inclined to put a bid in here, unless Powell says something wild, which is always the risk. All right, so let me look and see if he's said anything newsworthy. Powell says he expects there to be bumps on inflation. If the labor market deteriorates, they'll move more quickly. We don't need further labor cooling for in the inflation mandate to be hit. Labor market is continuing to cool.
Yeah, it's really cooling.
Oh, we showed you guys those numbers. Powell says he won't step down as Fed chair if asked to by Trump.
He said he would not.
He says he will not. He's flexing. The Iron Bank's flexing. I would not go if the president asked me to leave. Powell says, I'm not talking about anything related to the election. Powell says 1 or 2 bad data points, monthly data points on inflation won't change their process or outlook. The job is not done on inflation. Yep. That's why you got to get back in that core PCE box I showed you guys. That is a huge, huge thing for these guys. You
Yep.
have to get this thing back in here. And the reason why they have to get it back in there is because at some point down the line, we get our first recession in 15 years. They're going to need this tool. They're going to need QE to jumpstart things, right? The patient's going to need the paddles. So this is the batteries recharging. Once they get into the box, then the paddles are charged. Okay, think of it that way.
Yeah, people are talking like the curve has to go higher. There's a thing called financial repression where the Federal Reserve can literally buy up the entire bond market.
It could.
I don't think people understand that. They can drive every interest rate down to zero if they choose. And if they don't do that, Trump could just turn around and tell the Mint to print a $2 trillion bill and hand it to Powell. You know, and you can drive interest rates down to zero. You might have nice inflation, but you can drive interest rates down to zero.
So trend holding higher. Now we're at the double 100% 1x of the IB range. Okay, so that's the first hour range. Take that range, double it, and that's where it takes you. So a lot of times on normal days, you would usually look for that area to be resistance, and if not, cap the move for the day. Being that it's FOMC day, if we start pushing over that, you'll have to just look at that as flipping to support, right? Because FOMC day, if we're going to sell, we would have sold already. So likely we're going to get a situation where it's closing on the day's highs, and then you look for that lotto put play tomorrow and a sell overnight. And the reason for that is because, and Mr. Edro in the room posted it, but it's the stat of, and I knew this stat was out there, but I'll tell you exactly what it is here. It was a good reminder. Where did it go, Bob? Where did it go?
This guy's post so much in the room that
And there's so much information in this room. It's all alpha too.
yeah, if you guys aren't in the VIP room,
There we go.
spend up on it because you'll get your return on investment probably in a week.
Oh, no, wrong one. Here we go. Well, let me put this in. So I can put it in here. Oh, geez, that doesn't. Okay, here we go. When back tested over 20 years, when the VIX falls more than 20% in a single day, the S&P tends to pull back within 2 trading days 85% of the time. The VIX fell 21% yesterday and 5% so far today, Thursday. So that would imply that later today or on Friday, we will see a mild pullback. Well, given the way FOMC days go, we're probably going to close around the highs. So that's why we're looking for that put play.
I would do a Monday trade personally, Phil. I don't like next day stuff, but I would do a Monday put. That one you could talk me into. I think I would do a Monday 93 strike.
Can we get the teacher class? Can we get the teacher to buy a lotto?
Yeah, I would do Monday for sure. In fact, I'll do it. I'll post it too.
Wow.
It'll be Monday, but I'm waiting till the last minute because this thing could just squeeze right up into the close.
JT Irby, yep. In fact, I think alts may have put in a bottom on the election day. And I think that because you got to think through the narrative, right? Pro crypto now, right? Pro crypto and Merkel. So they've been beaten up. All of the BTC ratio charts have just been absolutely obliterated. And Bitcoin's, I think, hitting 60% dominance, and it's hitting a resistance area too.
Yeah, Phil. Monday 593s are only trading for $1.30. I think that's the trade.
I saw some talking about ending the Fed. I saw something to the effect of transferring monetary policy over to the FDIC as a potential Fed ender. We'll see. They always float all this kind of crazy stuff, and at the end of the day, it ends up just being kind of like status quo.
No. Trump says, "Do I want a third assassination?"
Yeah, I mean that's the way of the central banks. All right, so the 1x IB high 1x is still acting as resistance, but I do not be surprised if they continue to push this. Powell on current inflation story. So we're not declaring victory, but we feel like the story is very consistent with inflation continuing to come down on a bumpy path over the next couple of years and settling around 2%. Powell says he cannot legally be fired. It's not permitted under law.
Why is he worried about it? Trump never
because he's in the Q&A session and the reporters want something salacious. He's responding to the question. He's not saying.
It's so funny they try to set these straw man arguments.
Powell says we know people are still feeling the effects of high prices. Thank you for that prescient insight.
Yeah.
Expectations seem to be consistent with 2% inflation, but that's not what the numbers we see. Inflation, those surveys have been, I don't think that's a very accurate statement. I think Polymarket needs to, that's the next thing they need to go do. Polymarket needs to cover inflation expectations.
Wow. I'll tell you, we learned a lot. Every pollster in the country should just get fired and people just follow the poly. Just like you don't need the Federal Reserve. We don't need this. All we need is the 2-year note tells us what
exactly
policy is.
Exactly. There's too many games when you have a Federal Reserve entity that's not even federal. And it's backed by the big banks.
And they reserve nothing.
Yeah, they reserve nothing. I mean, if you look at the COVID response, and I think we know why they did that. But I mean, if you were like, okay, our response is just to smash the print button. Well, and they did it irresponsibly, right? The minute we made a new all-time high after the COVID dip, they should have said, okay, we have to stop. And no, they didn't. And inflation went out of control. Now, if you guys been following us, we were saying they were covering over a big banking crisis that was brewing, but and that's why they printed as much as they did. But it made no sense on the surface. Why would you do that? A monkey could have done that. Oh, yeah. Big squirt there on the ES. Okay, so that's what I'm saying, guys. The histogram is green. We're only getting a -2 pullback on the trend change line. So stingy pullbacks popping us higher, getting these little slingshots higher. Let's see what Mr. BTC is. The BTC is getting ready for a new all-time high here on Coinbase.
Jeez.
Guys. But
if we do pull back for 2 or 3 days, then that's when I want to re-enter some of my Bitcoin. I still have it. I still have Bido and Clean Spark, and I got limited out of Wolf. Went back in on it again. But I'm out of my MicroStrategy and Coinbase for the moment. Still in Misty and Coney, though. I remember 2 months ago when people thought Misty was the stupidest trade in the world. 55% ROI. That's not annualized. That's from the last 2 months. Misty's going to go over 40, guys, if Bitcoin gets to 100K. And it's still going to be pumping out 100+% returns on investment, cash flow wise.
Mohammed, 80K top for Bitcoin? No, I don't think that's the top. I think that could be, if you're talking short term, maybe. But here's a long-term logarithmic growth curve, okay? So last 2 cycles, we've hit the top of it. And, if the top of it right now is 230,000, essentially, is where we'd probably look to hit it. If this cycle were to play out, I'm proposing we're going to get a truncated cycle because the recession is going to roll everything over. Okay, Bitcoin's not going to just be ignoring a recession. So I think what will happen is we'll see. I think the first target overhead is going to be the midline of this. We already kind of hit our head on it once, which is kind of normal actually. When you're in the middle of a move, you'll hit it, and then you'll get some kind of reaction off of it. But I think we're going to push it back up over it, which implies us going back up to 100, and we'll find a top somewhere in this upper half of this area. Historically, if you pull the fibs off of bear markets, you get the 1.618 extension, right? That tells us that would imply that we're going to see 173. You did that off the last cycle. Right, let's do that there. Right, that's about where we topped out at. It was extended out to 61,305. So, that would be a normal cycle expectation. But I think we're going to get a truncated cycle. So, and then we're going to find how resilient this market is on the way back down. Obviously, there's a ton of support now between 55 and 65,000. Tons of support there. That'll be the first bounce area. You'll get some kind of prolonged bounce there. But if we start grinding on that level and the recession's not relenting, we could break through that. We'll probably fall all the way down into, you have a little bit of support in the low 40s, but then your next big area of support is going to be between like 31,000 and 25,000, right? That's your big area of support. And absolutely, that Bitcoin could come down and test those lower levels, even from a pump as high as over 100,000. I mean, that's just the nature of the beast. Don't be surprised. Bitcoin tends to go higher than people expect and lower than people expect in these moves. So, people, obviously there's a lot of expectations for 100,000. That's a big level. But these moves, when we get into this mode, right, these 2-3 month windows of parabolic price movement on Bitcoin can be astronomical. I mean, look, back in 2020, we went from 10,000 to 76,000. That move went from October to April, November, December, January, February, March. In 6 months, we went from 10,000 to 70,000. Looks like BTC just cracked a new all-time high. New all-time high. You gotta have a fireworks display for that.
Sorry guys, I've been fighting a cold all week. So I'm not my normal chatty self.
All right, new all-time high.
The name of the VIP package is the VIP package, right? Or the advanced package. I don't even know my own service. Just call Matt. 1-800-949-1408.
Yeah, just call Matt. That's our go-to. Just call Matt. I'm gonna get a shirt. Just call Matt. So they're starting to trend pretty good here, guys and gals. IB2X would be a juicy intraday target. That's up there at 6019.50. This is why you wait on those puts. Yeah. We may also see a back test of the 1X down here at 6,005. Just looking at the short-term chart, because I don't think Powell's saying anything that's scaring the market, right?
No, I agree. Hey, Cosmic Contrarian, I didn't mean I have 1,000 shares in MicroStrategy. I'm saying MicroStrategy is going to go to 1,000.
Powell says when asked about his plan to deal with stagflation, he says, our plan is not to have stagflation. Guess what, guys? Guess what we're getting?
I want to look like Brad Pitt.
Actually, I mean, I think we are having it. I think you're seeing it.
We actually have. It's such a ridiculous conversation to have. If growth is less than inflation, and growth is subpar, by definition, you're in stagflation.
Right.
Yeah. is Bruce in the room?
Yeah, where is Bruce?
Bruce T Dubs. You guys got to tell me who you guys are when you jump in these rooms. So
I don't exactly like when the market goes down.
That's Bruce. Bitcoin popping 77,000 almost, Bob.
wow.
Where's my fireworks?
It's getting a little bit above trend line now. I was looking for a pullback to 72, but maybe it's not going to happen.
So now, guys, what we want to do. All right. So this is, you guys are seeing in real time this major flag breakout. All right. So we're going to go either, here, or maybe middle of it here, or maybe up here, somewhere in here. Or if in true Bitcoin fashion, it says, screw you guys and your targets, we're going past this in some just psychotic parabolic move.
So, Hotcakes, they announced the rate cut about an hour, 20 minutes ago. I think you're drinking your coffee a little late today.
Yeah, watch ETH now too. ETH can play catch up. ETH BTC ratio can finally break out. In fact, if we look at that real quick for you crypto guys, BTC. And let's look at a weekly chart. Weekly chart, ho hum. What you're looking for on ETH BTC though is basically a large weekly candle to confirm that at this point. And I don't think it's going to be like this or this or this, because back here we were basically hitting the top of the move, right? Back going into March. And so whenever Bitcoin's going to consolidate or go kind of bearish mode after that initial push, you really can't look for a sustained move. However, now with going into a Q4 post halving in that environment, this is definitely what you're looking for to break out. So I think this is a weekly 9 EMA. Yeah. If you get a breakout over the weekly close of the weekly 9 EMA at this point, I think that's a confirmation on for going higher here on Ethereum.
Yeah, Chris, we do. You can schedule actually one-on-one coaching, and you can actually schedule like multi-month coaching for a discount too. Just see Matt. I got to be careful about what I can and can't say because I'm not a financial advisor, but I can at least share with you my opinion on the macro world and best practices. I'm allowed to do that, but I can't financially advise anybody.
If you notice on the daily chart here, Bitcoin, the trend first got overheated back here off this first initial leg higher. It did pause the trend for a bit. We pulled back, but we didn't pull back very much. Then we got a second leg up, which also got overheated. And that's where we started getting a lot of our yellow warnings. And then that kind of killed the move off. And basically our trigger range was resistance all these months. So now this is the breakout, and this is confirming a breakout over our trigger range. So at this point, we'll be watching for another run, and we should see more. We don't even have yellow bars yet on the daily. So we should see another episode where you're going to get multiple yellow bars like this, right? That doesn't mean the move is over. That means that you're probably getting towards some exhaustion, but you stay long until you see yellow bars, right? At this point.
Yeah. Filth. So, but Chris, I can at least tell you how I'm positioned. And it's definitely, humility aside, it's definitely money well spent. So,
yeah, 5 minute, 5 minutes been, if you look at the histogram, the 5 minutes just been green this whole time. It went flat, but it didn't go red. So you just assume this direction this whole time. So even though you had all these ups and downs in the 5 minute, basically you're looking for the dips. And that's where the red line comes into play, or the red to green. And these are what we call like the slingshots. And so you got a strong directional move. The slingshots are showing you where you can pull back into and bounce higher. and then your warnings are these yellow areas. Now, when you're in an uptrend, as we are, and you're breaking out, I'm not so much concerned about looking for spots where this thing rolls over. I'm actually, because it's trending higher, I'm actually looking to play these slingshots higher. If you get into higher time frames of resistance, then definitely I want to know on the lower time frames where these areas are firing off at, because then you're going to get into situations like this here. You get the warning here, and that kind of tops out that area. But I want to have a reason for. I just don't want to be like, I'm just going to short it because it's saying, hey, there's a warning here to go the other way. Chris, no, we don't. Not at the moment.
Yes, I think Sean will do a special thing every once in a while, Phil.
So 5-minute BTC trending higher, making new all-time highs. 76,999 is our current all-time high on Coinbase. The derivative exchanges will be a little bit higher sometimes, depending on where the premium's at. 6,010 on ES.
Wow.
Yeah, Bob, looks like a lotto put play is coming in end of day here.
Yeah, look at the guys. This move on SPY right here. ES, that's a Sornet move when it gets that steep, and it usually retraces it pretty aggressively. Chris, the best thing to do is actually call, actually email me at tradegenius100@gmail.com, and we'll create a phone conversation. You don't want to do anything via DM or anything like that, okay?
None of us will reach out to you via DM. If you get a DM from Bob or a Phil or a Matt, it's a scammer. We got a hard and fast rule never to reach out via DM, and that goes for a lot of things. People, that's their number one way to scam is impersonate influencers or people like that. And people think off the, because they can make it look just like a legitimate account.
Yeah, JR Miami, just send email to tradegenius101@gmail.com. If you're in the VIP room, you get it as part of the service. If you're not in the VIP room, then we haven't really set a price for the new indicator yet. Our preference would be for you to upgrade to the VIP room. You get far more value than just getting an indicator.
BTC trending nicely on the 15-minute. 15-minute pulling back to -2, and that's why we had that pop up there. So you got the histogram showing the trend, strength of the trend, and then this is your oscillation within the trend, that line. So it works pretty well. If we look at the higher time frames, obviously hourly is telling you get long back on November 4th at 67.6. And so far it hasn't even printed a red yet on that.
Yeah.
So you just stay long.
Hey, Chris, just so you know, Dave Devine and I, we were doing podcasts together before there was even a thing called podcasts. That's how long he and I, we've been doing, like almost 12 years now. He and I, we've been doing interviews together.
That's a long time. All right, what's ES doing here? Trending. This is just your typical grind now, guys. So if you look at the ES chart, the reason why this is happening in this session is because now you have all that Vanna and charm flows from the option Greeks that are pushing the market up. This is a 5-minute chart, and this is the what is this? The 1.5.
Yeah. Hey Phil, I think they may have shot their load here a little early. I might jump into those 593s here pretty soon. I'm waiting to see the trend line.
You still got, I don't know, the last 30 minutes. You don't think they're going to push it up?
Yeah, well, that's what I said. I'm going to wait 15 minutes, but it looks like they splooged it a little early. broke it over the trend line. I mean, over the Lin Reg. We'll see. Uh, I have the option table open. I'll tell you where is it at here. It had changed it all. 593s have been trading in the same range. Even with that pump, it only fell down to about 8 cents. Absolutely.
Looks like the press conference is over.
That's probably why we topped out. Let me look here.
All right, yeah. So he's been keeping it to an hour. They used to not do that.
Oh, remember you used to run it right into the close.
Yeah, and it was like, okay, you really have to do it that long?
Yeah. And guys, and Phil, we should probably cut it off right when we put this trade on.
Yeah, we'll just stay till the market closes.
Yeah, I do coaching at 1.
Yep.
So,
yep.
Um,
Let's just see where this takes us now. So if we recap, quarter point cut as expected. If we go to the daily chart here, the FOMC announcement at 59.94 on ES. We're trading at 6,008, not much higher actually. If we pull back, you have to watch like the Bollinger Band. That's 59.59. So you could, and that would be a mild pullback if all you did was get back to that. If you guys see, when we start poking, when you get full candle bodies above that Bollinger Band, right, it gets a little tough. And it makes it tough to go higher with any kind of like, another candle like this. In other words, it just gets really stretched. So the systems are looking for mean reversion. So I think based on the probabilities of a post-Fed move, you're looking at, and Bob's right, it might take till Monday, but you're looking for a move back into that upper Bollinger Band. So like this move here, right? Big proud candle body over the Bollinger Band, next day red, and eventually you get a dip over the course of the next couple of days under that. So I think it's reasonable to think about something like that happening, similar to that move. But Bob's right. You may want to go out till Monday. Give yourself a little bit of room.
Yeah, I just put the trade on, guys, because I'll have to drop off in about 10 minutes. So 120, 124 is the price I bought it at. 593 for Monday, the 11th. If you're in the VIP room, I'll post it in the VIP alerts. If you're in the ETF room, I'll at least let you know. If you're listening here, I'll let you know when I get out. If you're in neither room, good luck to you. I wish you well. But I think that's a good trade.
Mr. Wolf is just pegged on the hourly here, just absolutely pegged.
I got to worry. I got sold 122s on ExxonMobil tomorrow. I don't know if they're going to do a gamma squeeze on me in the morning. I'll just wait and see what happens. That was my biggest surprise out of the election, Phil. I thought there'd be more weakness in oil based on Trump's insistence on his campaign promise, but I think people are still too worried about the Middle East, if you will.
Mm. So Wolfie on the hourly is totally pegged. We're getting that slingshot look there on the 15. Actually, that's already played out because we got those readings earlier. So that's played out back up to the upside. 15 minutes still all green.
Yeah, CDE. I never sold out of my silver and gold miners. I thought it was a reaction low for the election.
4 hour on Wolf slingshot. You see that green? You get your -4 pop. Okay, so now we got +4. So you do start to look for exhaustion in the +4 range. But your 4 hour histo is still green, so everything is trending higher. You can still get a decent pullback and still maintain the direction because like here we had a pullback, right? Histo didn't change color. You got a really good pullback on it. and then that pop. But then that's where you kind of look for this line to oscillate up and down through the trend. So when that hit, that's what you're looking for. If you're gonna play the up and down game, essentially you're looking to get out when this thing's saying there's exhaustion and it starts to roll off, and then get back in at either a -2 or a -4.
The CCJ trade's working out for us too, guys. Let me see here. I'm plus 500 on those calls. I think I'm going to close that trade out. And guys, I'm telling you, the histogram has been freaking scary good.
Okay, so Powell's done. Let's see what Mr. Bitcoin is doing.
VP alerts closed.
Bitcoin is just grinding. I think Bitcoin is going to hit this upper trend line on the CME chart. CME chart likes its trend lines, likes to bounce off of that stuff. So I'm looking for a move up into the 78 area on the CME chart. And they may go take the back adjusted high up here as well. That's possible, which is 78,920. That's the all-time high on the back adjusted chart. Remember, futures price in at a premium, so
yeah,
it's a different high than the actual spot BTC USD chart.
And SVIX is not confirmed any of the move higher, Phil. So people they're holding on to their ball here. And I gotta see where we are with that trade. That was another profitable trade. I may close it out too.
Yeah, so if you look, this is the liquidity chart, but basically we had a 1, 2, 3, 4, 5 wave move up. Then we had an ABC correction. Now we're having another so to me we're starting another 5 wave move up. If I were to draw this out. So maybe we get something like this, and then like that, and like that, and then up, hit that fib target up there or whatever.
Not bad. Here, guys, if you're in the SVIX trade, I'll put it in the room too. We got in at, looks like 2402 for me out of 2830. I think that's a pretty good trade. We'll be able to get in out of this thing about 50 times. I'm still holding my UVXY puts though.
Pretty small range though for FOMC, and I think a large part of that is just because this has been priced in. I mean, if you look at the move, right, we've been ripping last few days higher. So typically, guys, if you're going to have an aggressive move up into the FOMC announcement, that can act like a pivot.
Yeah.
And that's why put plays, lotto plays, not risking a lot, but something with a good risk reward ratio.
Yeah, and I mean, to Phil's point too, that doesn't mean the world is ending. I'd love anything between a 3 and a 10-day pullback in this market so we could slingshot into the end of the year.
Yeah, we have OPEX. If you look at if we look at the daily chart here, so obviously we're blowing past the daily 20, right? We pulled back, broke the daily 20. A lot of people got creamed on this move, and all we did was really bounce off the daily 50, and then you had a big springboard higher. On the daily chart, our histogram was green, never went red. You had -4 readings, which, going into that low was implying that we were going to get a snap back up higher. So, off of the 50-day, you have to take a shot long. The hourly is definitely getting heated, so maybe we run into a scenario like this back here where we'll get a warning, really turns into chop. I'm not looking for a major sell down if we're lucky, you get a pullback to the 20-day moving average.
Yeah, I agree. They're not really giving any premiums out. TLT, you got to get tucked in pretty tightly here to get your any premium.
What's the yield curve at? Yield curve's dropping a little bit. 0.117.
Yeah, TLT is pushing up.
Yeah, so put call ratio is definitely in an area where we could take a breather. Gex definitely in an area where we could take a breather.
Yeah,
These are pretty elevated readings on Gex. Bitcoin new all-time highs. So the all-time high today so far is 76,999. Not bad.
Yes, sir. It gets scary when you're making money hand over fist easy. I always get nervous, you know.
Yeah, it's just that you got to recognize the environment. If it's a breakout environment, then
Yeah,
you can't get lulled into thinking that's just going to be the way it is. I think that's why a lot of retail they catch these waves, right? Like GameStop and all that stuff toward the end of 2021, but not realizing that breakout windows have a pretty short shelf life.
yeah.
And
You gotta get used to the nausea that you're experiencing.
all right, I got 20 more minutes before the close.
You guys have any final questions for me? I got to drop off in about 5 minutes. Throw them in the chat.
You are loved, Bob.
Yeah, I'll get you guys 1 second here. I'm finishing out a trade. All right, I'm set. Let me check the room out here real quick. Combined PHCC, we're all strange dudes. The smarter you are, the weirder you are. My view. Beachy, we have beginner classes. We're gonna actually do. If you guys want, in January we're gonna have a live class in Orange County. Next May we're gonna have one in back in Nashville. And I've been talking to Phil. I did one. I'm gonna do it again. It's like a 90-minute class that you bundle the training with 1 year of service, and that went over really well. A lot of people joined actually, so that's a good one too. And that's very basic stuff. So, thanks, Beachy. Very kind of you. By the way, I didn't pay Beachy to say that, but. Gino, are you the Gino I talked to earlier today? Let's see here. All right. They're trying to press ES up here into close. It's funny. Beachy, you're too funny. When Phil and I were both sporting the beards, we looked like brothers when we were in Hawaii. That was pretty funny. Oh, way to go, Beachy. Oh wow, we're in Hawaii, Beachy. You know, Phil's obviously Phil. You were born in Maui, right, Phil, and then moved to the Big Island.
Yep.
Oh, now you live north coast of California. Okay. A lot of people bail out because they want to see green pine trees instead of green palm trees. Oh, good. Makaha, Makaha. Yeah. Okay, you're hardcore. Uh, yeah. I don't know how much I made on mine. I made $500. I have to check to see what I bought it for. But it's a nice trade, not bad for a couple hours worth of work. Guys, there's so many more out there too. I just can't even follow them all. Oh, Gino, that's kind. Thank you so much for saying that. Oh, oh, a guy I worked with, his wife was uh fifth generation Portuguese, and he lives in Aiea though, right above the hospital.
This chart BTC all it tells you all you need to know.
That's amazing, Phil. I have the same chart. It's the one I keep. We're a little extended at the moment, but not much. I have to ask my friend Cal what her last name is, but they were here for so long they're allowed to join that one dinner club of people that have been in Hawaii for so many generations. I forget the name of it. We've done classes in Florida before, Miami. We've done one in what did we do, Phil?
We did two in Orlando.
Two in Orlando.
The first one we did was pre-COVID, and we told everybody. I think Bitcoin was trading at like $6,000 or something then, and we told everybody like, "Hey," told them, explained everything because people still didn't quite understand. Said, "Look, you want to get in now," and guys made huge money off of that move.
Phil, man, Beachy's forefathers built CNH sugar. That's amazing.
What's that now?
If you look in the chat, Beachy is a Portuguese girl from Makaha, and said her forefathers were involved in growing up CNH sugar.
We got some history in here.
Yeah.
I might have to break out some pigeon.
Throw some pigeon at her.
Oh, let's see. I see from Makaha.
See that guy? He teach you trading and linguistic arts. And she just threw a hey brother at you. And then of course the band Sons of Makaha, right, Beachy? Yeah.
Makaha Sons.
Makaha Sons. Hawaii's my adopted homeland. I've probably been there 50 times. I'm going again too, Phil, end of February into March. 2 weeks in Maui.
Good for the soul.
It is. I threatened never to come back one time, but I'd have to go. My wife would go back on her own. All right, guys. Hey, I got to drop. I'm going to do a coaching session at 1. I want to get ready for it. So I really appreciate it. I hope you guys learned something today. And if you guys aren't in the room, absolutely check it out. A lot of my customers are right in here right now. They'll tell you whether it's worth it or not. But if I was a betting man, your best ROI is a VIP room. So check it out. Call Matt 1-800-949-1408 or go to tradelikeagenius.com. And I think you'll definitely appreciate it. Yeah, I do. The reason why I do Orlando, guys, and it has to be an airport that people get relatively cheap flights. Tampa's not cheap to get into.
And centrally located enough that we can get a group together to come.
Yeah. So, Texas, we have a lot of customers in the Dallas area. We'll probably eventually do one there.
Yeah.
But we're just scheduling out 2025 right now. So we know we have Nashville set, and we know, pretty sure I'm going to have Orange County set here by next week. And then these are 3-day training, and then probably do something again in the fall somewhere. Nice, Jerry. Jerry, did you see the thing I posted this morning about a Special Forces guy,
Nice.
a Marine Corps guy, saying that you think the Marines are crazy, the Dutch Marines are even crazier? I was thinking of you. I sent you the article.
Oh, Phil, sorry, Phil. For what?
I don't know why.
What happened?
Jerry, Miami, we'll come to Hawaii. Hey, we'll do training in Hawaii even if we get 5 people. Well, Phil, find us a conference room.
I'll have to keep my ears open.
Oh, she called you Matt. That's why.
Pow.
Don't worry about it, Beachy. Matt's better looking than Phil, so you took it as a compliment.
I'm a beautiful
Two
than
little
Matt.
freedom. Semper Fi, do or die. All right, boys and girls. I gotta go. Phil,
Yeah.
thank you so much. I gotta rock off.
Okay, brother.
Yeah, hurry, brother. See you soon.
All right, now we can talk about Bob. He's gone. BT, you grew up in Hawaii, I take it, since you're multi-generational. If you guys have any questions, I'll stick around for about 10 more minutes into the close here just to see how this thing closes up. Bob took some lotto puts because, what is it? 85% of the time, you get a pullback. And that's because when the VIX falls more than 20% in a single day, as it did yesterday, and it pulled back more today, S&P 500 pulls back within 2 trading days, 85% of the time. So technically, you want to go out till Monday on those puts if you do, because you could have some consolidation tomorrow. In fact, because it's Friday, a lot of times what ends up happening is that the Friday day candle on the futures will put in a high. So what that means is today we had a high of 6,013. Excuse me. I'm kind of losing my voice. 6,013 was a high on today's candle. Tomorrow's candle opens up at 6 p.m. Eastern. So you could poke a new high over that high, okay? And that would kind of fulfill that weekly high on a Friday. And then we start to see it kind of go soft overnight. And you could even potentially open lower tomorrow. Otherwise, if they just kind of hold it, then you could definitely see Monday also pulling back. But if tomorrow's red, Friday's red, a lot of times Friday directionally will play into Monday directionally. So Friday down, Monday down. And that, I'm not expecting anything major, but, maybe you get into some of this, back test some of this area here, this 59.25 area. You could easily come back in and test that. In fact, a lot of times when we do break out over a previous all-time high, you will see that they will come back and they will test it. So, for example, like back here on ES, right, you have that's your previous all-time high. We push up, right, and then we back test into it and actually pushed under it there. And then we bounce, then you get another move up. And then this came back and tested it again, actually tested these lows. But notice how somebody was in here at this level really defending it. You had multiple attacks. These are daily bars. You had 1 day, 2 day, 3 day, 4 day, 5 day, 6 days of them chewing on that level. Couldn't do anything. Market, it goes the other way. They come back one more time, still couldn't break it. So that's a very stout level. You break this level going forward. Later on down the line, you basically want to mark that off and watch for that level to break in the future. that's the equivalent. And really, I guess you would look at the SPX. That's this level here. So 5675, that area, or let's say you could even say 56.9, basically 75 to 5700. Let's call it that little zone in there. You break that, we got problems. So, and I'm not saying we will break that on this pullback. I highly doubt it, in fact. But let's say the market blows off. We head towards, let's say this thing. We have a grand finale up at 6,400. Bitcoin's north of 100,000. After things start to pull back in, you lose this level going forward. That's probably going to be a very significant break, and potentially could be rolling us over into a bear market that's prolonged. So keep an eye on that 5,700 area on SPX going forward, because that was a very stout level that held. But if you look on the SPX chart, right, that previous all-time high area, you'll notice that they couldn't break it ultimately on the SPX. So, and if you look at where we had another all-time high breakout, right, if we mark this one off here, you'll notice that we broke out and then we pulled back and back tested it. Had a 1 day, day and a half of basically a false breakdown. Whenever you get those false breakdowns, by the way, those are very powerful. It gets back above it again and boom, off to the races. And that happens all the time intraday on the chart. Yes, the futures will do that constantly. It's called a trap, right? It's a bear trap, basically. And then everybody gets left-footed. Why? Because ultimately that's what makes the biggest rotations. People get squeezed out of their positioning because they get basically an absolute wrongest location, and then leverage takes them out the other way. So that's what we have in play as another all-time high breakout back test, which will be this level up here. So going forward, and maybe this is where we pull back to in the next day or two, is that 5880 level on the S&P 500. So just keep an eye on that level. Watch for that to hold on a back test, because pretty much all of these breakouts give us a day or two at the minimum of a back test on that. Well, let's see. Go back on the futures chart here and see how we're ending the day. This is our range trader. So, a little pullback here at the end of the day, flushing out some of the late longs. We go back into our FOMC announcement chart here, pulling back into the range. A lot of times what will happen too, when you get this move up and they do the pullback, what a lot of times we'll see is the 50% holds, which is that's what we're getting now. They're holding the 50%, and then they try to bounce it off of that. But if we start losing the announcement, the key here now is if we lose the announcement low, okay, then we're probably heading lower overnight. So I'm going to be watching for them unable to hold the announcement. If you look on previous announcements, when we get the FOMC rate announcement, you don't trade under it after the day is done if we're going higher. So if we're not going to go higher overnight, then what I would expect to see on the charts is that we actually start pushing under this FOMC announcement, and we start trending under it, and we take out the days, the low after the announcement, right? That low down here, we start taking that out. That turns into resistance, and we start getting acceptance lower. Then I think we're going to see a pullback. When we get a pullback in an uptrend, the first level I like to look at is the, and I'm going to just give you guys kind of what I look at in these particular situations. This is the hourly 34 EMA and the hourly 55 EMA. I would expect wherever we meet up with this overnight, if we do get a pullback, there's probably an initial bounce there, and even more so if you get to the 55 EMA, right? We've been trending over those for a long time now on the hourly chart. So you're going to get a mean reversion move back to them. And those, especially on the 55, hourly 55, unless there's nuclear bombs going off or something like that, just normal trading action, you're going to get a nice bounce off of that. So keep an eye on that going into tomorrow as well. Even though we can roll over and be lower, and let's just say it's a red day, if we run into this guy, expect a bounce. Okay. And with that, I will take any last questions. Otherwise, we will look to wrap this up into the 4 p.m. close of the markets. Okay, yeah. Yeah, you went to school there. Yep. So you know the drill. You know the drill. Yeah, I went to school there all my life. But I think I too um I go back and forth. Spend some time in the mainland. I like to ski and stuff like that. I think if you grow up in the islands, it's good to spend some time in the mainland. Yeah, no worries, John. Thanks for tuning in. All right, we got like 1 more minute left here. Getting a little squeeze there at the end of the day. Bitcoin's just a beast. Do not underestimate this move, guys. This is a massive structural breakout that we have here, okay? This is a massive multi-month bull flag. This is a weekly chart. It's not a daily chart or an hourly chart. It's a weekly chart. We have the window from election inauguration. Look, end of 2020, vertical, right? We only have a few examples because it's a young commodity. This is 2016 into 2017, right? Again, multi-weeks up, okay? I mean, back then it was only $700 to 900 and change, but relatively speaking, a big move. So I expect no different. In fact, this might be the biggest squirt of them all, right? Something I wouldn't be surprised if we see exactly something like this, right? We saw basically a move from back in 2020, a move from 15,300 up into the inauguration of 40,000. That's a huge move. It's a huge move. It's a 3x. So do not underestimate how fast this can go. Do not try to short Bitcoin unless you're scalping and know what you're doing. I think Bitcoin is going to be, if this goes as usual, Bitcoin will be very forgiving to the long side. If you get in at the wrong location and you hold your nose and wait, and it should make you whole. But basically, this weekly breakout is what we were looking for. We did not get it right. We were forming this bull flag. 69,000 is, I should change the coordinates here to 69, 1, 2, 3. Okay, there's two things here. One is a large weekly candle that closes above the old all-time high. That's the previous all-time high. Okay, so we're getting that. We didn't really get that. We sort of kind of got it here, and then it got quickly negated. But in all of the previous all-time high breakouts, you always get this big, humongous weekly bar. So today's Thursday. The weekly bar closes Sunday evening on Bitcoin. Unless they totally drop the ball, we should see something similar to this. Who knows? We could even be up here in the 80s by Sunday. I mean, it moves very quickly in this environment. That's going to confirm this breakout. I would not hold my breath for a back test of the 69,000 level. For most likely, we've just kissed that level goodbye over the last few days. And then in terms of the other thing we look for to confirm a weekly breakout into the next bull leg is a weekly close over the current previous all-time high, which is the one we put in March, right? 73,835. And as long as we get a weekly close over that, I think it's go time. Now, you might get a back test of that level, but consider that kind of like the level to close over this week. So that's probably and we got overnight, we did get down to, I think it was 74,500. So we got to within about $500 of that range. But the fact that they couldn't even get a move back to it tells you how strong the bid is right now. So very, very explosive setup here for Bitcoin. And with that, guys, I'm going to roll. So it's been fun. Hope you guys, if you guys can, join us in the VIP room. This is what we do every day. Answer questions, talk about the markets, talk about the macro, all kinds of stuff. Thanks for watching, guys. Appreciate it. Have a great night. Yep, you too. Aloha, guys.